So our final tax video here is brought to us by Lego Friends Girl. We got some music on her shirt. Let's do this. Okay, so I filled out the first line in last video and realized that I really needed to read this carefully, and it was a little tricky. And what I had done is we had done our taxes and wages earned. I'm doing Darian's taxes. And this gentleman had made $58,584.78. So that is a 4 there. Maybe I should make that clear. And then we were trying to look at what I couldn't figure out was what was the taxable interest that I should be adding here. And that happens to be this $749.36. And then all the rest we're just leaving blank. Didn't have any dividends, didn't make any taxable amounts on IRAs or Social Security benefits. And so what we need then is the total income that this gentleman makes, and that's going to be our line 6. So we need the sum of these two numbers. So let's do that. 58,584.78 plus 749.36. So for this individual, he made $59,334.14. That becomes line 6. Okay, so from there, line 7 says let's do a standard deduction or itemized deduction. If we were going to do itemized, we'd go to Schedule A, and there's where we could look at all the complicated things that we could deduct. It tends to be better if you're able to do it, and if you have a lot of deductions. This gentleman did not have these deductions, so we're going to take the standard deduction, and that is, since he's filing single, we're going to deduct $12,000 from this amount. I am able to do that in my head, surprise. Oh, and notice it says adjusted gross income. If you have no adjustments to income, enter the amount from line 6. Otherwise, subtract line 1. Subtract Schedule 1, line 36 from line 6. We don't have any adjustments to this. So we're just going to leave this as it is, and then we're going to subtract the $12,000 from that, which will get us to $47,334.14. This is our young man's taxable income. If he had qualified business income deductions, so if he had started some sort of LLC and had business expenses that he could deduct, we would have done that here. This person does not. This individual does not. So there's nothing there. And we will then continue on and do in 47. So that is his taxable income. And then we got to calculate his taxes. And this is where we're going to jump back to our income tax brackets from the beginning of the lesson, and we're going to see that filing single at the $47,000 puts him in the 22% tax bracket. So I'm going to do the calculations for line 11. We're told here line 11 is where you'll put the tax you calculate using the tax brackets. So that means 10% of his first $9,525. That's the taxes he owes, plus 12% of the next $38,700 he made, but we have to subtract the $9,525 that was already taxed back here at 10%. We need to add into that the 22%, which is whatever above $38,700 up to $82,500. Just so you can see where I'm getting that, it would be on this one, but our guy is has a taxable income of $47,334.14. So that's our maximum that we put in here, $47,334.14. We subtract from there the amount that's already been taxed at the 12%. That's the $38,700. Let's scamper over to Desmos and get that amount. 0.1 times 9525 plus 0.12 times the 38,700 minus 9525 plus 0.22 times 47,334.14 minus 38,700. So the amount of taxes, according to Desmos here, is $6,353.01. That's what we owe the federal government. And that's what we're going to put in line 11. $6,353.01. If we had a child tax credit, we'd do it. We don't. We would subtract line 12 from line 11. So there's nothing to do there. If we had other taxes, we'd worry about that. See Schedule 4. Total tax, add lines 13 and 14. It's the same as that, so we're going to ignore that. Federal income taxes withheld. Okay, let's go back and see what did he have taken out already. Right here, he had withheld from his paycheck $8,941.46. So he had his withholding a little bit high, right? Ideally, these numbers would be exactly the same, so he would have more of his income in his savings account so that he could be investing that at a higher rate, at an interest rate. Note that he's going to get a return. So if this guy's a spender, then like this is kind of forced savings, but you get no interest on that. The government does not pay you interest on the overpayments you made to them. If there were some federal refunding things, we'd look at those, but there's nothing for here. We'd add lines 16 and 17. Well, we're just going to replace this. This is the amount we paid. If line 18 is more, then line 15 subtract, and this is the amount you overpaid. Okay, so this is going to be our refund. Let's calculate that. 8941.46 minus 6353.01. Okay, the federal government owes us $2,588.45. Great. We could decide, do we want all of that refunded? Do we want some of it funded? How do we want it funded? I'm going to go ahead and put my routing number and checking account here. And if you all want to send me some cash, go for it. Just kidding. We'll let that be. Most people would take all that money and have it sent to you. If these numbers were less, right, you would owe some money to the government, and that's what you would pay. And you'd figure out how you would pay that. And that's how the 1040 form works and how taxes tend to work. And we're getting close to that tax season, right? It's April something or another. Good luck, everyone.